Good afternoon, everyone. Welcome, everyone, to the webinar Digital Real Citizenship, Data Security, Secrecy, and Traceability. This event is part of a series of webinars that the Central Bank is carrying out to debate with the society the guidelines on the digital real and also to raise cases related to the technology and uses. Today, the rights of citizens will be on the focus of this debate. We are going to discuss the limits for the use of citizens' data in the issuing of a digital real so that we can ensure the rights to privacy and the security of their own data, as well as these innovations can bring benefits to the citizens. The first series of these events that talked about the advances and the benefits of this digital real is online on YouTube. These events, as well as the other following ones, will be also online. My name is Juliana Mosaic Sandri, and I am from the Central Bank, and I will be the moderator of today's event. For the event, we have the presence of three great professionals that are going to share their standpoints on the subjects and also answer questions from the audience. The questions can be sent to the email real.digital@bcb.gov.br. And as soon as possible, they will be addressed to all of the speakers. The first guest is Silvia Amélia Fonseca de Oliveira. She has a degree in administrative law. She also has a master's degree in foreign relations from the University of Lyon. She also has an specialization in public administration, and also she has she has studies on high defense. She is also a federal police officer since 2006, and today she is the director of the Department of Recovery of Assets on international realm from the National Secretary of Justice from the Ministry of uh, Public Security. I also present Ms. Yana Demareschi, who is the Regional Director of Public Policies of Facebook Financial, leading the engagement of the company with governmental agencies and regulators of the economic and financial sector of Latin America. She is a master from the University of Cambridge, and she has an MBA from the University Consortium that has the Wharton School, London British School, INSEAD, and China Business School. Before working for Facebook, Yana was the executive secretary for the Ministry of Industry, Foreign Trade. She was also a special deputy secretary for the Ministry of the Economy and also deputy director of the World Economic Forum in Switzerland. Welcome, Ms. Yana. Finally, we also have the presence of Dora Kalfin, who is a professor of the Technology of the Intelligence and Design, Digital Design, TD from PUC São Paulo. She was also a doctor. She got her PhD and post PhD as well as PhD in the University of São Paulo. She also studied at Sorbonne. She's the co-author of the book Companies and Network Consumers, a study of collaborative practice of Brazil, and also the author of the books The Awake the challenge of companies in digital network and will AI substitute human intelligence. He is also an economist for Epoca Business, which is a magazine. Welcome. It's a great honor for me to be in this event with you. On behalf of the Central Bank, I would like to thank you for accepting this invitation. The Central Bank, in May of this year, published guidelines for the development of the Real Digital with the intent of promoting innovation in payment means. The discussion about the issuing of digital currency by central bank, in English it's called Central Bank Digital Currency, CBDC, has gained momentum along the years. Open to discussions and the development of this issue internationally, the Central Bank of Brazil, in order to employ efforts with its strategic agenda, has been promoting debates not only internally as well as with its international peers, aiming at the development of a CBDC whose goals are To follow the dynamism of the technological event development of Brazilian economy, contribute for the appearance of new business models as well as other innovations based on technological advances to increase efficiency in the payment system, retail payment system, and favor the participation in Brazil of international scenarios, not only regionally but also globally, increasing the efficiency of transborder transactions. It is important to highlight that any involvement that happens in the sense of evolving towards digital real will be in a congruence with central bank in its mission to ensure the stability of power purchase of the currency seal for a financial system that is solid, competitive, and foster the welfare of the population. It is in the core of this discussion that this event comes to be. The insurance of citizens' rights is as a fundamental point to preserve trust and ensure the good functioning of financial systems. From this premise, the webinar aims at discussing the best way of implementing digital real in a way to, by one hand, ensure the rights to privacy and insurance of your own data, as well as foster innovations allowing for adherence to norms of risk prevention and include the financial inclusion of Brazilian population. I would like to start by asking two questions to our debaters. First, do you assess that there is a risk of loss of privacy for the citizens in case we choose to keep information individualized? Could this be this stimulation for the use of CBDC or digital real digital by the citizen? Second, what is necessary to ensure that the digital real be inclusive as well as accessible to all of the sectors of the society? In other words, how is it possible to promote financial inclusion with digital real or real digital? Let's start with Ms. Sylvia. Sylvia, please, the floor is yours. Could you please share with us your perceptions on the theme? The floor is yours. Thank you very much, Juliana. I would like to thank for the invitation made by the Central Bank of Brazil. And I would like to thank Juliana Sandri for inviting me, who is also the mediator of this event. I would also like to greet my colleagues, Diana and Dottie, and congratulate them for the initiative. It is very important within a theme of such a great dimension and greatness to bring to the society and to bring the society and the other segments of the society to discuss. There are many points that are important when it comes to the real digital or digital real. It's a series of debates as well. Today we're going to talk specifically about the points that Juliana has mentioned, even though there are other points that are also equally relevant that are interconnected somehow. But I understand that this change is a change that is very significant when you talk about the change in the use of the money, something that is part of everybody's everyday life. This goes way beyond the technological change. In fact, it goes through a change of culture, of the way how people relate among themselves, how they relate with the public assets. So there are implications in many different fields. And every innovation has to take into account three important points that we can bring for reflection. First is to keep that which works. That which is working well, we should keep. In other words, if it's working well, innovation should keep it. On the other hand, we need to find solutions for that which is not working. In other words, use innovation to bring something that can improve that which is not working and avoid the creation of new problems. We do not bring innovation to create new problems. So within this realm, what we also have the perspective of the citizens. In other words, how the citizens see and want to see this change, even though this is not a thorough change as we have seen in the guidelines. The digital real or real digital does not come to replace the fiat money, but it's a change that little by little is going to end up being part of everybody's life. So how does the citizen see see that, and how does the market prepare itself for this change, and how does the state have to act so that this change happens safe in a safe fashion. The comments on the markets, I'm going to leave it to my friend Yana, who has a different, a deeper perspective from the citizen perspective. I believe it is important that we understand. I mean, the state needs to understand what are the needs, perspectives, and especially the desires of the population, so that this innovation that is proposed can be adhered by the population. I mean, we cannot think of an innovation that is not going to be adhered by those who are going to be the frontline user, which is in this case the citizen. So the citizen needs to be assured that this change is good. And from the standpoint of the state, the state needs to ensure to the citizen that this transformation, that this innovation, is not going to bring any more problems, and specifically from the standpoint of privacy. And it is important to bring to the discussion that Brazil already has, I mean, the Brazilian system, the Brazilian financial system, and the system that we have already has a bunch of rules that ensure the secrecy of data, the secrecy of communication, as well as we have the general law of data protection, which is more recent, but these are insurances that are absolute and that are going to seep through, as we have seen in the guidelines of the central bank, this implementation of this digital health. So the state needs to be always attentive, always with an ear to the ground, to the use of these guarantees to ensure the privacy of the citizens. But on the other hand, we also know that these insurances end up not being absolute, because there is another part of the citizen or of the people who do not have, uh, and so it is up to the state to see, I mean, to oversee any deviation. So these are rules that are already applied in terms of insurances, and these insurances, they have to and will be observed in the creation of the digital health. So the citizen somehow will have the same insurance of the current or existing norms, as well as others that should be created more specifically to ensure that the system works in a way that doesn't bring, as I mentioned before, more problems than solution, or even more specifically, that comes to solve the problems that we have. From the more practical standpoint, what I imagine now, following this line of the question that was asked, is how can we ensure that the citizen will be able to use this system or get into this system in a way to ensure this inclusion. And here I would like to bring to the reflection on the technology. I mean, how can we ensure an immediate availability and constant availability of this digital money to the citizens? So we need to think that there has to be some sort of physical device that is going to allow for the use of these transactions. The logical, I mean, we know that this is all part of the discussion of the definitions that are being sought by the central bank. And also, we need to have a mechanism for these discussion, for these transactions to happen. So internet or some other sort of communication. So, yeah, when we think about availability, we also have today, because today people can only withdraw money cash if they have a point of distribution of cash available. So somehow you decentralize the distribution of money instead of having a place for withdrawing the money in cash. You decentralize that in the hand of every citizen. So, and if this device is accessible, I mean, if it's a device that is accessible for the person to use, then they end up having a greater possibility, or maybe a greater availability, a broader availability. So we need to know and understand how this system is going to work so that we can have that available. And so it turns out that when we, I mean, it has to be available everywhere and at any price. I think that this is a challenge in Brazil. We still have significant differences within the state.
That can eventually create some kind of segmentation, and some who have the availability of digital money and others who don't, and eventually uh, while these two kinds of currencies convive, you have to know if that won't generate any kind of distortion, including the value of the currency itself. And these are things we're curious to know and know how this will work. And we'll need regulation, and the state's role will be present, especially the central bank's role, and how this relevant actor is going to regulate the market in a way such as these technologies will be accessible and won't generate market distortions. And without going on for too long, but I'd like to leave a reflection of eventual risks that we can run of fraud and people taking advantage regarding sometimes even difficulties from the citizens who deal with new technology. So maybe it would be necessary to have awareness campaigns, prevention campaigns, and aid itself of regarding how to use these new resources. So, well, I think these are my first considerations, and I leave that for the initial reflection. Thank you, Sylvia. Now, Ayana, so we can turn the ball to her and see what would be her considerations, these digital issues and other issues. Thank you, Juliana. Good morning and good afternoon already, everyone. Congratulations to the Central Bank for the event, for promoting and fomenting this debate. And also thank you very much to my panel colleagues today for a discussion that will certainly be very profitous. Well, look, to begin the debate, it's relevant to understand also why does it matter for the citizen to talk about a digital real or a CBDC as we talk in the English jargon? So I think what matters is to take the hook from Juliana's question about inclusion, potential for financial inclusion of the solution. And it's the finding that the traditional financial system has a high cost. Often it's slow, and for many issues, it leaves many unassisted. When I say that, obviously, I'm not thinking here on the most recent example we have in Brazil, which is the case of PIX, which is a huge success and that addresses many of these worries. But I'm making a broader comment, a more general comment, that, for example, shows us over the last data we have from World Bank 2017 that over 1,700,000,000 people around the world have no banking service. So apart from that, we also have a high cost for the transactions. For example, an average of 6% per payment transaction that can reach up to 20% when we talk about international transactions and processed along days. So it's in this context that the digital currencies come as a possible contribution. And within these digital currencies, obviously, the CBDCs stand out. I imagine that from the regulator, the central bank, are the preferred ones, because they can maintain the regulatory frameworks in the political public policy space for monetary action more intact. So we understand that the digital currencies, the CBDCs, have a major potential to increase efficiency of payments, reduce friction in the international transactions, and even to include, for including in the financial world, the people without banking services. And why do we mention payment markets so much? Because it's a good starting point for the innovation, disruptions on the financial sector. First, because sky's the limit in terms of modalities, opportunities, business models that are feasible in this segment. And apart from that, it's a segment in which you can start operating with a without being so intense in terms of capital, so to say. So it's really a fertile ground for this kind of innovation and disruption. The main innovations in this payment segment end up happening in the logic of what we call mobile first, which are actually the apps in smartphones. And why is that so relevant? Because, for example, coming into the Brazilian case, last data shows we have 60 million of people without banking services in Brazil. But these 60 million people, 58 million, uh, only 2 million don't have a smartphone. 58 million from these 60 million have a smartphone, although they don't have a banking account. And what does that mean? Through this technology, this platform, we can include millions of Brazilians to have access to new technologies. Obviously, this is data previous to the pandemic, and all the effort of assistance along the pandemic happened through exactly the digital platform. So I want to say here that there is a major potential for Brazilians who don't have banking services or that are underserved, as we say in English, badly assisted, so they can, through their smartphones, access a new level, a new environment of financial services. In other words, more regarding the CBDC aspect, the design and the format of digital real and other digital currency can very much enhance access to financial services through the feasibility of non-banking ways to store values, store currency. Our leader in Facebook Financial, David Marcus, signed recently uh, something that a formula, and he said the formula to our point of view to unveil a new time in terms of efficiency and inclusion in the payment system are digital currencies of high quality, within which the CBDC are the jewels of the crown, so to say, joined to good regulation and good protocols. And here we can address good part, if not all, the worries regarding privacy, other fraud, other worries that we have in this public policy environment, and also added to a good infrastructure and digital portfolios that should be inclusive. So the sum of these three elements, digital currencies of quality, good regulations and good protocols, and good infrastructure with good digital portfolios, certainly will be able to begin a new chapter in terms of financial inclusion, not only in Brazil, but all over the world. Thank you, David. Now, Professor Dora, to share with us, please, you have the floor. Good morning, everyone. It's a pleasure, an honor even, to be invited by the central bank. I worked before returning to the academy. I worked in the many years in the financial market, so it's a sector I'm most familiar with, and including central bank, which I think that from the public institutions, public autarchies, I always had the impression that was the one that had the set of professionals, a team of most trained professionals. So I wanted to express the trust, my trust, that Banco Central is going to be able to handle the challenges of a potential digital currency or the digital real, as it has been facing successfully many other challenges along, well, decades. First, well, as I am a researcher, I would like to uh, first establish a place for digital coin. It's in a context of deep change. We are living not only in the financial market and not only because of the digital technology effect, there's a culture change, there is a habit change and political change. We are in a phase This previous even to COVID-19, we were in a phase of very deep transition of the working of society itself, and evidently the awareness, obviously, that COVID-19 only brought more sped up. If we talk about specifically the financial market, we urge the players, competition is different. We have a disintermediation, so to say. We have new products. Nowadays, the currency tender, legal tender itself, the countries, well, some of them, it doesn't even exist. China, I was there in 2017, and China, by the way, is where legal tender was created, and China doesn't work with legal tender anymore. You go up to somebody who's asking for money in the street, a beggar, he has a little machine, and you give him some money through a machine. So we are actually not, a digital currency is not a transition of an intensive use of legal tender to digital coin. It's another component. It's not my specialty, but it seems to me it's another component within this digitalization process we're going through, that's more and more intense. So I see in this process, to me, what has to do with today's debate is this speeding up of digitalization in society that generates data. So nowadays we have the big data, so-called big data, and that effectively grows more than exponentially because everything now, for instance, we are generating data here. So major part of our activity is through a digital device or a digital means. So we are generating data. Part of this data is called personal data. So this issue of privacy of data doesn't regard, it's not an isolated matter from digital currency. It's a theme that is cross-cutting to the whole digitalization process. The data bank, digital data bank, we already have internal discussions over data. So the all this access matter, well, we have no time to go into this, and it's even maybe not necessary, but the whole access to uh, through financial transactions and happen digitally have to do with privacy data, safety of data. So I think this issue of privacy of data and digital currency must be treated, and I bet the central bank is treating them like that within this set of this new reality we have, which is not so new, but is intensifying, and that we live more and more go producing data, and this data has to be taken care of. I think there are many differences. There's a difference regarding the currency and the fact that legal tender is anonymous. So when I do a transaction in legal tender and paying something, it's anonymous. There's no record that that transaction. There's no record about it, a digital record. When I do a transaction, sorry, a digital currency, as I do with other digital transactions, I have a record, and I identify the parts. So there's a registry, and I have a change regarding legal tender, but not a meaningful change regarding the other means or other ways of financial transactions that are digital nowadays. So from the point of view of the people, I just to conclude, I think there's a very large role from the authority in case we talk about the central bank, which is the bringing awareness to people about what's going on. So I think that adherence, or going to digital currency will have to do with the perception that people have that it's positive, that it makes life easier. Like Yanara quoted, Pix is a success. Why? Because it makes life enormously easier, and it's enormous. It's easy. It's two components. It makes life easier, and it's easy because there is a large barrier regarding the digital culture, digital education, the access. If it's more complicated, people tend to establish barriers. But if it's easy, like in the PIC's case, people will use it. And that's it. That's a natural law. And my impression is that by adhering, as it's happening in PICS and all innovating products, and it's happening in the digital banks, people don't have the awareness about the risks they are running because of that migration. I think that's the obligation from my point of view from the authorities, in the case of the central bank, to place this discussion into movement, bring awareness about the risks, identify them, and warn people about them. And what do they have to do? What do I advise them to do? And what should the central bank advise them to warn them about the risks they're running? So all these privacy discussions, I as in study in artificial intelligence, this privacy discussion, because I know the logistics of artificial intelligence is cross-cutting to all apps based in data. This discussion of the privacy issue is super uh, discussed. So how this hits them, there's a decision that each one makes, even unconsciously, between privacy and convenience. So that's not new. This is a discussion that has at least 4 or 5 years ongoing, but it's true. So if there is convenience, people tend to minimize the impacts of the privacy issue. So it's up to the authority, in case the monetary authority, the central bank authority, to bring this discussion, to inspect, to have to be sure and to be make it safe for the citizen, so he's protected from the data point of privacy point of view when he will make a transaction with digital currency. So I think that's the issue. Central bank has uh, a major discussion about regulation of artificial intelligence, and one of the models that has to do, well, there are some, but one of the models that is very quoted, inclusively, explicitly quoted in the regulation proposal from the European Commission last April 21, there was a document, is the automatized credit decision with artificial intelligence technology. There are many opinions about the proposal from the European Commission, but one of them, I think maybe the main one from the general point of view of the proposal, is that I don't see feasibility to have an authority that's centralized, regulating and inspecting the the application of intelligence, artificial intelligence. I think each sector has to do it. In Brazil, we have it, and all over the world, we have sectorial inspection agencies. So each one has to incorporate new technologies, new products, new possibilities. So why am I saying this? Because in case of, for example, the central bank, they have a challenge, as all authorities do, regulating authorities, inspecting authorities, to be updated. And I bet this is what central bank has been doing. So it has to incorporate, since how we use it. There's a banking system, financial system, for example, for artificial intelligence technologies, which are disruptive, that have many benefits and bring also some risks, as well as it will incorporate which are the benefits, what's the digital currency and the risks. So the more it's easier to bring people into it, and people should feel that it makes their life easier, I think they'll join it. I don't see this as a problem. But what in the behind the curtains, well, there's the decision making the central bank has to do. So regarding the central bank, it's the one of the authorities. It's not because I'm here by invitation of central bank, but it's the authority I feel most comfortable with in this country. So I think it's a tradition. Like I mentioned in the beginning, they have very able technicians, very trained personnel. So the whole discussion must be going on intensely within the central bank before launching the digital hell, which is a whole process. So it's just thinking that it's not issues that are only the discussions of digital environment. So the whole environment, digital environment, the discussions of our life's digitalization generate data, and this data, part of them are personal data, and part as personal data, we have the privacy protection issue that has to be taken in consideration in each new product. So that's a little bit of it.
Thank you very much for your perception, Dr. Dora, and also for bringing the knowledge to the central bank. You said, Professor, of the risks. I mean, there are many risks. You mentioned the risks, and Sylvia also talked about the risks. I mean, if I understood correctly, you talked about the importance of maintaining that which works well, the solutions for that doesn't work, and avoid creating new problems. And I would also add risk as part of that care. Speaking of risks, and I would like to ask specifically to Sylvia, what are the risks? I mean, when you discuss risks on digital, one of the risks that we see in digital payment is the financing of terrorist actions as well as money laundering. Since you work very closely to that, what do you understand that should be done in regards to this risk to ensure the right level of privacy and privacy of data and security of data, having all of the prerequisites to fight money laundering and the financing of terrorism. And if you think that a Brazilian CDB could increase the power of the tools to fight money laundering and the financing of terrorism. Well, thank you very much, Juliana, for the question. I think that it's very interesting. I mean, Professor Dora brought some aspects that are pretty interesting in the following sense. We have, with the implementation of Real Digital or Digital Real, partial change. And Iana also brought it up. I mean, great part of the market today, of the financial system today, already, I mean, already is in systems and with controls that are necessary from the standpoint of the state, whether it's the regulation to keep the thing working well, as well as from the standpoint of avoiding some risks, such as what have been mentioned, including the risk of unduly use of this system. So when we talk about the Brazilian CDB, we are talking about one small part or fraction, which is, I wouldn't say small, but we are talking about the use of cash money. We know that a whole financial system already works within the realm of digital transactions. In other words, transactions that are subject of regulation and control, and with the participation of the state, so that we can avoid some sort of crime or felony. So today we have a well-established system in Brazil and in the world of prevention on the financing of terrorism and money laundering, which involves the market, involves the state. It involves the state not only in terms of regulators, but also when it comes to the punishment of any deviation. And the citizen is also involved. Sometimes they don't know, but there is also this whole control which is carried out. And I would like to highlight that in addition to what we have in the financial system today, we also have some normatives that are geared towards the use of cash money. I mean, the use of cash money is free. It's not 100% controlled, but in some cases, there are some rules so that this can be the subject of alerts in the prevention system. So these eventual changes, as we have been dealing with here in terms of innovation and change, they have to take this into account, the protection of the citizen as well as the protection of the system. The citizen must also take into account that they somehow they are protected by the system directly so that they are not victims of some fraud or actions from criminals, as well as the protection of the system as a whole. The financial system in the fight against money laundering, in the sense, I mean, money laundering, and it's also important to talk about financing of terrorism. We always talk about these two issues in not the same way, but somehow following this financial system. So this is to avoid that the system itself be utilized as a mechanism to cover illicit actions. This is the idea of the prevention of money laundering. And this somehow, I mean, these 2 points end up relating to one another because the market, the financial system, all of the system that is part of these financial transactions, they have policies today, and we need to have policies geared towards uh, the money laundering. So when it comes to digital money, what I think that is going to end up happening is we are going to have specific norms for the protection of that segment. In other words, access to that data will be kept under secrecy, just like today we have banking data under protection. This is not a full protection. It is a protection. I mean, it's a secrecy that can be rendered flexible depending on the norms of the state when it comes to prevention of illicit actions. So, what do we imagine that is going to be necessary? We need to think about the new system, the new way of using these social relationships. As the teacher said, it's not only a change in terms of changing cash money for digital money, but it's the whole transformation that comes with it, which will allow, focusing more on the point of the control, is going to allow that from the standpoint of prevention and control, and even from the standpoint of repression of money laundering and the financing of terrorism, a new segment will come too, which is the registration of transaction that today we have no registry of. So I believe that it will somehow increase controls of money laundering as well as the financing of terrorism. And it will be necessary to have this segment of identifying what are the points so that the norms are established. This will necessarily go through the market itself as well as the establishments that are going to uh, dictate their own rules or create their own rules based on risk assessment. Of course, all of this will be developed, but I understand that it will not run too far from the scope of the system that we have today, which is well implemented, but which is also extremely necessary and that has rendered significant results when it comes to control and prevention of money laundering and financing of terrorism. So I think that this is the way it goes. I hope I have answered your question, Juliana. Wow, that was great. Thank you, Sylvia. I think I'm going just to get a hook from what you said. You mentioned the issue of the financial system having too much information, having a lot of information. I would like to ask you a question in that sense, Yana, because the financial system has always been based on information management, not only for the bank itself, but also for the business, for the follow-up of information that comes from the relationships as well as the financed projects. But today, in this world of digital transformation that Professor Dara mentioned so well, there is a new category of companies that are also getting into this realm, into this society, working with the management of information that are the so-called big techs, that they have a very strong vocation to work with data, whether, I mean, through different uses. So we observe a global movement of these big techs in the sense of increasing the application of them also in the financial systems of traditional payment. So So I would like to ask Rihanna, since you work in this world, how do you imagine the future of business of these companies that are getting into these financial services? That before this movement of digital transformation was restricted only to financial industries. And I would like to know if the CBDC is part of this vision or if you believe that other technologies would be more adequate for the rendering of these services. And what are the benefits of these other businesses that could, I mean, what other benefits could bring? You've mentioned something about inclusion, bringing people to the banking system, but how do we tie all of this together? How do we see other companies getting into this market with the issues of citizenship as well as the privacy of citizens in this world? Excellent question, Juliana. In fact, I believe that it is consensual that every evolution of the financial system is due, and it is still due to technology. Technology is, in fact, the great vector for progress and for evolution, for opportunities from new business models that rise. But when it comes to Facebook, we have 3.5 billion users a month. So this is a company that has a client base that is huge. By the same token, we have 200 million companies that use our products or services. But what is important to clarify? Facebook already works on the payment system globally since 2009. It started with small niches and then it expanded its operations. In Brazil, since this year, we started to work on the segment of transference between peers through Facebook Payment, which is a Brazilian company, which is compliant with all of the regulatory framework of Brazil, regulation, data of private secrecy, of private data secrecy, etc. With the creation of Facebook Financial, I believe that the company signals its interest in continuing to expand in a more structured fashion its operations in this segment. And it is important to say that it's always following the same logic that we've maintained and developed all of our family of apps. So a great example of that is the potential of inclusion, for example, of a WhatsApp. We're talking about a state of the art engineer embedded in an app that works just the same on a state of the art phone or a simpler phone in a very sophisticated network as well as in a less sophisticated network in such a way that we don't even remember that world in which we paid a few dollars for international calls or some reais, cents of reais when we exchange it SMS messages. So it's this experience, this inclusive experience without friction, without difficulty, that Facebook also wants to offer within the realm of financial services. When you ask, I mean, if the development of a CBDC fits within this plan, of course it does. I mean, the development of digital currencies as well as central bank currencies fits perfectly and interestingly within the strategy of our companies. So we support and we encourage and we follow with a lot of attention and care the movement that is happening all over the world. There are many central banks that are in this movement, just like the Central Bank of Brazil. Some have made more consistent announcements in terms of launching and stuff, but we really have a great enthusiasm for this movement. However, what is important to mention? First, there are still many questions that are open, the many choices regarding design of a CBDC. We encourage our spokespeople with whom we talk to always, or our interlocutors, to always take into account the operationability of the system among themselves. And this is something that is part of the guidelines that were published by Bassein in May. Another element when you ask me, so, but Iana, is it only CBDC that you oversee, or, I mean, that you envision, or do you consider other possibility? Well, We encourage CBDC, but we also understand that some world banks will not have the necessary resources, whether they are financial or uh, human, to make it happen. So Facebook also understands that digital currencies, or the stable currencies as we call in English, if they're well designed with very good managed reserves with transparency and professionalism in a well regulated environment, they could certainly uh, supply the same, perform the same work of a CBDC. So we see with a lot of enthusiasm the evolution of these currencies because, as I said before, we impute to them a great role when it comes to the evolution, inclusion, and efficacy of the payment system. So, just to finalize, I think that you mentioned data, and I believe it's very consensual that we understand that data decreases in cost. And I believe that this is the logic behind the positive registry and open bank, which are programs that are managed by the central bank. I believe that here the issue, just like Professor Dara put and Sylvia put so well, the heart of the matter is being immersed in an ecosystem that is transparent, that is proportional, and enough to address the risks in this sector. So I believe that this is my 2 cents regarding the great potential of this program. Of course, we have concerns that are possible to be addressed, but from the market standpoint, as well as from companies such as Facebook, this is a great opportunity that will certainly be followed through.
Thank you, Yana. You talked a lot about the relevance of the well-regulated environment to have this structure, so to say, so we can move forward. I'd like to ask, and you said that you mentioned it many times in this last talk. Based on that, I'd like to ask Professor Dora, who has experience in the digital transformation world, if there are specific recommendations on the patterns and governance model that we should consider to have this balance. Sylvia already mentioned something about the issue of money laundering and prevention against terrorism financing, but what other recommendations in your experience could we adopt in the case of a digital real? Look, Juliana, I'm not a specialist to say what recommendations to the central bank. Well, it would have to be someone from the field of regulation and well focused in this matter. I'd like to say, take the opportunity to make a more general comment. I think that this discussion of regulation, legal framework, it's happening, as I mentioned, in many areas. All the transformations place in the agenda the regulation issue. Today we live in an environment that I ask myself, how do you feature it? How do you characterize the environment we live in? Complexity and speeding up, acceleration. And these two factors are major hinderers of any trial for regulation. Why? Complex regulation. Complexity, well, things aren't easy. Everything is interconnected, and as the word says it, it's complex. And acceleration, well, because there is a very quick change. It's difficult. And this, there are many assessments indicating this. It's almost a consensus. Uh, um, there's a difference between the development of new products, new technologies, and new opportunities, and the regulators. There is a backing, so there's a delay, and that makes it difficult to think in a legal framework. And what we have today, not only the big techs, so the so-called big techs, which Facebook evidently is a part of, but even if we follow up the process of some major Brazilian companies in this period of the period that they led this quarantine, well, we began consuming much more intensely in a digital manner through the e-trade, the digital platforms. This we can observe there are many Brazilian companies that the process of change and innovation they have, it's very, very intense over this period. And I think that the major issue of competition has to do with the ability for innovation, ability to innovate. So if you are in a complex environment and accelerating, the most innovation ability you have, the better you'll be situated from the competition point of view. And this ability to innovate has many variables that integrate, that converge to generate the innovation ability. And we establish actually a virtuous cycle. It's what we're going through. We have a concentration, a market concentration in Brazil. Here in Brazil, there are some companies who are concentrating retail, for example, incredibly, as well as over the world, the major tech platforms are concentrating market because they're able to, they effectively converge, they have the control, they have the ability to deal with these variables which are paramount to innovation. So they have resources, they buy many companies. An important part of innovation is not generated internally, even in the major platforms, tech platforms. They are bought, they are generated in the market, they are buying. We follow up this. It was publicized that a company like Magazine Luiza bought over 30 companies, 30 startups. So this is a process of innovation. It's part of the ability, the financial resources to be keen and be able to buy and connect the new option, the new solution, so to say, the technological solution or process solution into your operation as a whole. And there's data. Data is that's part of the virtuous cycle. The more you have users or clients, the more you generate data, like the base, all these large ones. It's important to think what business models are. These major tech companies' business models is based in artificial intelligence. So artificial intelligence technology is based on data. So the more data you generate, more you perfect your system, your products, and then that's what establishes the virtuous cycle. More users, more clients, more consumers will seek your platform. So today, when we think there is this disintermediation in the financial system because there is this market concentration. It's not, they're not separate phenomena. The focus is for the into the client experience, your user. If it makes it easier for the user to buy and pay in the same place, in the same platform, that's what the market will offer. It's already being offered. So it's a facilitator. Today, technology allows you to have to create this ecosystem that makes the consumer's life easier, the client's life easier. So that's what it's about. How will I facilitate, how will I deliver to that user of mine, to that client of mine or consumer of mine, all, everything. I'll hand him everything over so he can have the whole operation cycle with me. So this division, these divisions amongst sectors, the trend is that they are already becoming thinner more and more. And the trend is this. The financial market in Brazil, as you know, has always been hyper concentrated. Five banks had 82% of the market share. So there's only one country with a higher concentration, which is the Netherlands. So competition always happened between these five banks, two public and three private ones. The last 2, 3, 4 years, well, this has been changing. There are many different players who are coming in, and there are major competitors, including exclusively forcing the large banks to transform themselves. Because if a new bank comes into the market and it offers an experience, a better experience to the client, it's compromising, it's threatening the large bank. Why will I? It's much more bureaucratic and much harder to be in a traditional bank. It's easier to be in a new bank. So this migration will happen, and it is happening nowadays. The WhatsApp system, which some proclaimed as a possibility to increase, to provide a response to low banking services numbers in Brazil, because it's not correct. The whole mechanism for closure of transactions done by WhatsApp are totally connected to the financial institutions. Like it's not separated, so that tends to change. Also, I think we have to think always from the transformations that are going on point of view, which are the prevailing business models, what is ability for innovation, and that's it. And that are many, right, Professor? They are many. The context really of digital transformation is coming, as the professor mentioned, in a very strong manner. I have no doubt we have a lot of things to talk about regarding this matter. The discussion doesn't end here. As the professor mentioned, the context is of major transformation, but unfortunately, our webinar of today is reached the end. So I'd like to thank Professor Dora, Sylvia, Anna, and all who participated and who were watching us, our debaters, for sharing with us their perceptions. Central Bank will keep on having these discussions with other players and all the interested parties. So you are all invited to participate. Our next webinar, which will deal with offline operations, will happen in September, and it will be broadly publicized in central banks' social networks. I invite you all to be keen. Thank you all. I wish you all a good afternoon, and especially to Yana, Sylvia, and Professor Dora, who were with us today. Good afternoon. Thank you.